Okay, when we talk about the AI revolution, what's the first thing that comes to mind? Probably chips, right? Software. But behind all of that, there's this massive, hidden world of power and cooling, and that is exactly where Vertiv operates. They are one of the most critical, yet often unseen players in this entire revolution.
So how does a company win in this insane high-stakes race for AI infrastructure? Well, Vertiv just dropped a masterclass, honestly. They made two huge back-to-back moves that we're going to break down for you right now. All right, before we jump in, you know the drill. This breakdown is purely for educational purposes. It is not financial advice. Please always do your own homework.
Okay, let's get into it. We are looking at two, honestly, game-changing announcements. First up, a massive glow up for their balance sheet, which, just solidifies their entire financial base. And second, and this is the really clever part, a brilliant partnership that takes on the single biggest problem holding back AI right now.
So first up, let's talk money. Let's talk financials. Vertiv knew that before you can go out and build the future, you've got to build a rock-solid foundation for yourself first.
And the first move? Whoa, a massive $2.1 billion offering of what are called senior unsecured notes. I mean, that's a huge deal on its own, but it gets even better when you see what they did next.
Right alongside those notes, they also locked in a brand new $2.5 billion senior unsecured revolving credit facility. Now, this replaced an older one that was way smaller and much more restrictive. The sheer scale of this financial overhaul, it's just immense.
Now, you might be thinking, debt is debt, right? Well, not exactly. What's super interesting here is the type of debt. They moved from secured to unsecured. Think about it like this. Secured debt is like a mortgage on your house. If you default, the bank takes your house. It's backed by a physical asset. But unsecured debt, that's like a signature loan. It's backed only by your good name, your reputation. For a company to make that leap, wow, that is a massive vote of confidence from the entire market. So what sparked this huge vote of confidence? This right here, Vertiv just achieved what I like to call the investment-grade triple crown. They got a solid thumbs-up rating from all three major agencies, Moody's, S&P, and Fitch. This was the golden ticket, the key that unlocked this entire, much more flexible, much more favorable refinancing deal. And here's where it gets really strategic for the long term. Just look at these maturity dates on the new debt. We're talking 2036, 2046, all the way out to 2066. They've basically pushed their major obligations out for decades. Locking in today's rates for that long gives them incredible stability, and more importantly, it frees up a ton of cash flow for growth. And who better to sum it all up than the CEO himself, Giordano Albertazzi. He said, and I quote, "These financing initiatives will bolster the company's liquidity and provide financial flexibility to support the company's growth strategy." I mean, it's pretty clear, right? The goal was simple: get more cash on hand, get more flexibility, and pour fuel on the company's growth. And I'd say, mission accomplished. So with all that new flexibility, what was their very next move? Well, okay, on to the second big move. Now that their financial house is in order, Vertiv immediately turned its attention to solving the single biggest problem, the biggest bottleneck, holding back the entire AI industry. And here it is, the elephant in the room. The number one bottleneck for AI isn't a shortage of chips, it's not a lack of software, it's power. Pure and simple. It's about getting enough electricity from the grid to feed these incredibly power-hungry AI systems. And the problem is really twofold. First, just getting connected to the utility grid can face crippling delays. We're talking years in some cases. Second, building out all the power infrastructure yourself requires a mind-boggling amount of upfront cash. These two things together are just choking the growth of data centers in all the key markets. So what's Vertiv's answer to this massive problem? A really clever strategic partnership with a company called Generate Capital. The solution is called Bring Your Own Power and Cooling. Basically, instead of waiting around for the grid, data centers can now, essentially, create their own power right on site, exactly when they need it. Okay, so here's the breakdown of how it works. It's actually a pretty genius model. Step 1, Vertiv brings its A-game, the pre-engineered integrated power and cooling hardware. They're the experts. Step 2, Generate Capital comes in and handles all the money stuff, the financing, the ownership, even the day-to-day operations. So what's the result for the customer? Well, they get the data center capacity they desperately need, way faster than before, and without that giant upfront bill. Plus, they still have the flexibility to connect to the utility grid down the road if they want. It really is a win-win-win. Okay, so we've got a much stronger balance sheet and a really smart partnership.
What does all this actually mean if you're looking at this from an investor's point of view? Let's connect these two big moves to a couple of core investing ideas.
So we can analyze this through two different lenses that a lot of investors use. First, there's secular momentum. The partnership with Generate is a perfect example of this. It lets Vertiv tap directly into a massive long-term trend. That's the AI data center boom, by literally removing the biggest pain point for their customers. Then you have growth at a reasonable price, or GARP. The big debt refinancing fits right in here. By cleaning up their balance sheet, they're significantly de-risking the company. That makes their already strong growth profile way more sustainable, and frankly, a lot more attractive to GARP investors.
And really, this table just sums it all up perfectly. On one hand, you have the debt refinancing. The impact? It lowers their risk and gives them a ton of financial flexibility. On the other hand, you have the Generate partnership. Its impact? It removes a huge bottleneck for customers and, as a result, should directly accelerate sales. It's just a really powerful one-two punch that strengthens the company for today while putting it in the fast lane for tomorrow.
I'm just going to leave you with this really powerful statement from Vertiv's own management team. They said, "We are winning now and winning later." And that really says it all. This isn't just about grabbing the opportunity that's right in front of them. It's about building a company that can really dominate the infrastructure world for decades to come. And these two moves, they are a crystal clear signal of that ambition.
And that's our look at Vertiv's big strategic plays. Hey, if you found this breakdown useful, do me a favor and hit that like button. And be sure to subscribe for more deep dives just like this one. Thanks so much for watching.